So I want to tell a little story about Renofi first. It's been several months since I first met David, who's going to be one of our hosts here talking through Renofi. David and I met at it was essentially a VC meeting where we were talking through what Renofi is doing to open up, and this is the keyword, open up inventory. We're all experiencing inventory problems no matter which market you're in. And with that, we're looking for opportunities to get buyers into homes, not only for us, but specifically for the buyers to make sure that they have options when they have a life change and need to move. So in this case, where Renofi steps in, I'm going to let David and Madeline talk through that. But where it steps in is it gives your buyers options if you're working with a buyer. And the second piece, which you probably already read when I sent out the invite, was that if you're a listing agent and you know the property has some challenges when it comes to updating or needed renovations, this gives your sellers an option and you an option to present it to potential buyers. So we'll get into more of that later. So without further ado, I want to introduce David Balderston, who's the head of partnerships at Renofi, and Madeline Schmidt, who's the partnerships development manager. So thank you for joining.
Thanks so much for having us, Kevin. Good morning, everyone. We're thrilled to be here to chat through Renofi and how we can potentially work together to close more deals. I'm David Balderston. I'm the head of partnerships here at Renofi. I'm based in Philadelphia. Madeline is a partnerships manager. She's based in Louisiana. Renofi spans the country. We're in all 50 states, but I've done a number of Renofi loans in your markets. So I'm really looking forward to working with you all. So a quick story just to kick things off. Renofi started 5 years ago when Justin Goldman, our CEO, had 3 kids under 5, lived in a neighborhood that he loves and his wife loves, but they needed more space. And so they started going around to local banks and talking to contractors and figured out, I have 8 or 9 years of equity in the home. I'm a good credit history, but I can only tap in and get about $100K in equity to do the project I want to do to expand my living space. And that was the light bulb that went off for Justin and said, I need to do a project of $200K, but I only have equity despite having paid every bill I've ever had up to 100. And so there's a gap here, and that's specifically the gap that Renofi solves. We've created renovation loan products that enable borrowers to borrow based off of the future value of the home post-renovation. And so with that, I will jump into the presentation. All right. So we all know that it's a really tough market out there. There's limited supply, competitive market, rates are sky high. And also over the next 5 or 10 years, inventory is becoming older than it's ever been. We have many millions of homes, hundreds of millions of homes entering their prime remodeling years looking forward. And so when we work with agents, we like to talk about, what creative tools can agents fall back on in an increasingly difficult market. And so the primary 2 use cases for agents with Renofi is buy side and sell side. And so Renofi helps buying agents expand inventory to get their buyers into homes faster. And on the sell side, Renofi enables listing agents to sell old and dated homes faster by inspiring buying agents and home buyers to renovate. And so at a super high level, Renofi has launched the first post-close renovation loan. So agents can help clients turn the home they purchase into their dream home, whether that's immediately after closing, 6 months after closing, 2 years after closing, by having conviction and confidence in the ability to borrow a significant sum of money without having to accrue equity in the home. It helps agents move and close more deals and move inventory they otherwise may not be able to move. So again, the world's first post-close renovation home equity loan. You can borrow up to 90% of the post-renovation value, 100% of funds available at closing, no draws or inspections. We have loan products up to $500K on a second position mortgage. There are no prepayment penalties. So in the current market, aside from transactions, a lot of folks as we know, don't want to touch the super low mortgage rates. And so in the same, whether the folks have lived in the home for quite some time or it's a recent purchase, this loan has nothing to do with that purchase mortgage. It sits in the second position. And so whether you have a client who is looking to renovate in the current market, or you're helping people close deals that on a home that needs more work, Renofi can help in both of those scenarios. So I think many of you have probably had a listing like this. It ticks every box on your client's wish list and is $100K below their budget, but their bathrooms look something like this. And so the question then is, do you show that house? And what we've heard is that most agents wouldn't. The buyers are looking at that listing, they see this picture, and they're like, why? I can't live there. I don't want to live there. It needs too much work, and renovation's scary and expensive. And so with Renofi on your side, our hope is that you will show that house, because the path to getting into a home that you're happy and comfortable with for the long haul, that's a more difficult problem to solve today than it has been in quite some time. And so it's viable, it's possible, and it requires a partnership like us with you all to help more home buyers become comfortable with the renovation path. And so we'll walk through an example that highlights the power of Renofi loans. And so in this example, if a couple is putting down 20% on a $500 home, and they visit a bank for a HELOC, they'll quickly figure out that they have $0 of tappable equity. So all renovation costs in this scenario would have to come out of their own pocket. But Renofi loans don't care what the house is worth today. We care what the house will be worth post-renovation. And so this dramatically increases a homeowner's borrowing power. These same homeowners can now finance 100% of their renovation immediately after moving in. And that begs the question, but what about the monthly payment, and how does the math actually work? So let's walk through that for a moment. Their target initially was $600K. They're looking for a $3,500 monthly payment after putting 10% down. And we'll compare that to the buy and Renofi plan. With a smaller purchase, the mortgage is only $450, and they can add a $90K Renofi loan to do the renovations. And combined, they still have $540K in total mortgage balances. The combined monthly payment comes out the same as well. This assumes a 20-year HE loan. And so this is an example that we have closed hundreds of loans of this kind to help folks understand, yes, we know there are a couple things about the home that you don't like, but by focusing on the less competitive inventory that needs a little bit more work, you can create that home into a home that you love. And most importantly, we can get them into a home. That is the name of the game in the current market, is help clients get into the home. It's harder than it's ever been. And so now we'll walk through, our partnership program. We have a couple of tools to walk through specifically. And the first that I want to start with is our scenario calculator. So that same exact scenario that I just walked through on the prior slide, we have a $500,000 current home, $450K outstanding mortgage balance. We're projecting it'll be worth $615 post renovation, a $90,000 loan. These are our loan terms and interest rates. This assumes a good credit borrower. This assumes a maybe not quite as good credit borrower. But this tool is available to you to pull up on your phone, pull up on an iPad, pull up on your computer as you're working with clients in the preliminary stages. Maybe you're seeing a home, and this tool is no commitment. There's no strings attached to using this tool at all, no data collection whatsoever. You can play with the HELOC or the fixed rate. And this gives you the initial opportunity to plant the seed in that homeowner's head about what's possible in considering a property that you're showing to them. So this is our eligibility calculator. Madeline is here to serve as the next step. If you have someone or a potential buyer interested in really further exploring and understanding, I understand that this is at a high level, roughly what it might cost, but what does it actually mean for me? Here's my specific example. We have a team dedicated to help serve as a scenario desk to talk through eligibility scenarios so that you can help your clients build more confidence in going down the renovation path should they be interested. We also have custom flyers and a co-branded landing page. So I just walked through the scenario calculator. Again, no commitment to using that tool. Subject will, we won't be cold calling anybody that uses that tool. It's really just intended to help you at a very high level vet the eligibility of that client. We have a question that comes in. Is a secondary appraisal ordered to determine the fixed up value after repairs? Madeline, would you like to answer that one?
Yeah, I'll take that one. Thanks for your question. So yes, there is an appraisal process for our loan request. Our appraisal is going to be a 2-in-1 appraisal. So the appraiser will do a full walkthrough to determine current value, and then they'll use the renovation plans to assess the after renovation value as well. Once the project is complete, there is a final inspection done by the same appraiser just to confirm that the plans that were provided was the full project that was completed. Oh, looks like another question. Are the rates the same with your program, and how does this differ from a HELOC? So the rates are very similar. So actually, with our lending partners, if a homeowner were to secure a HELOC based on current value, so not necessarily a new purchase, but just somebody who's built in equity, they would actually see the same interest rates as if leveraging the Renofi HELOC, except with ours, we're leveraging that future value. So we're getting a larger loan amount, and in some cases can even help them with a lower interest rate, because by leveraging the future value and that larger collateral, the loan to value ratio is usually much less than if we were just basing it on current value. Thanks, Julian.
All right. Thanks for the questions. Keep them coming. We also have the ability to create custom flyers. Whether you are on the sell side or the buy side, we want to help you with marketing materials. These are just two examples. If there's a property, that you have in mind, and we want a property specific flyer, we're here to help provide you what you need to help your clients get more comfortable with the renovation path. We have Malin, you want to answer that one live?
Yes. So Aaron asked, can you do this on multi-unit buildings? We can assist on a multi-unit property. However, the renovation is going to be limited to the unit that's going to be the primary unit. So if a homeowner is purchasing a duplex and they intend to reside in one of those units and upgrade the kitchen or the bathroom, then we can assist with that. If they are purchasing the multi-unit strictly for investment purposes, we would not be able to assist based on future value. And it looks like another question. Do you have a list of preferred contractors? Is it required to use your preferred contractors? We do have a list of preferred contractors. It's not a requirement, but it does help streamline the process if a homeowner works with one of our contractors, because they've already provided our due diligence and feasibility. So it definitely does streamline that process. But if somebody brings their own contractor, they'll go through our vetting purposes, which is going to be a verification of license and insurance for the contractor. And then we do a full feasibility review on the project just to make sure that the numbers make sense.
I would say that this is another value add to your clients in this process and making them more comfortable with the renovation path. We vet every contractor in detail. We do diligence on them. So whether we've done it previously or they bring a contractor to us, there can be reassurance that Renofi as a third party is assessing, is this contractor well positioned to do this project, so that the value, in fact, the ROI that the appraisal suggests is there does in fact come through. And so our risk analysis of the renovation itself is three-pronged. It's feasibility of the project line by line, looking at the scope and contract of the renovation to understand, in detail what's going to be happening on this home. The more detail in that document, the better for the appraisal to get the higher ROI. We do diligence on the contractor themselves, and then there's that as is and future value appraisal. That's the third prong of that renovation underwrite. Our lending partners look to us to evaluate the risk of the renovation. We are not the lenders ourselves. We underwrite the risk of the renovation. Our lenders underwrite the credit risk of the borrowers. We merge those together, and that's what unlocks the additional borrowing power for the homeowners and leveraging that after renovation value. We have a follow-up to the multi-unit question.
What if a client wants to deconvert the building to a single family home, which can cost $500K or more? Can you do that type of lending? So that's going to be on a case-by-case basis, kind of depending on the area. Definitely something we can look at, because I believe we have been able to assist that in the past, because ultimately our lenders do want it to be a single family home to be able to offer that future value. So definitely submit the scenario and we can review it based on the borrower, if the credit score, income. But on a stronger borrower, yes. On a lower end borrower, we may need to look at an exception.
I'll keep moving. Oh, we have another question.
How long does this process take? Does someone apply for the Renofi loan after they have already closed on the property or before? So the first question, how long does the process take? When we have a full package, which we consider a full package, income documents from the homeowner, and then also full renovation documents from the contractor, it's about a 45-day turnaround, depending on the appraiser's timeline. And so for the second question, does somebody need to apply for the Renofi loan after they have already closed on the property? We do suggest to kind of work in tandem. We don't want to do the hard credit pull for the Renofi loan until we have closed on that first mortgage, just as to not impact that purchase in any way. But we could start our process and have the renovation reviewed and go through our appraisal process. That way the homeowner can feel confident about getting that loan and then close shortly after they've closed on that purchase. Seems like the property could be gone by the time you get this in place. So the homeowner can definitely secure the property for the purchase. Some homeowners want to move forward right away with the renovation. Some homeowners would actually prefer to maybe live in it for a month or two just to see what exactly they want to do. And so we can work pretty quickly with the purchase, so that way they can still secure the property, but it gives the homeowner a lot of flexibility of when they want to start that renovation.
And we can provide a pre-qual early on, pre-purchase, right? When they're in that buying window and they're putting an offer down, we can help with a pre-qual on the second. And that's really what Madeline is here to do, is to help those homeowners understand that with high confidence, you're going to be able to tap into the future equity after closing on the first. So we will not have any impact on the timeline of first and closing that purchase. Our intent is to give confidence in the ability to access more funds after closing. And after that closes, we can kick off that renovation process. We also have co-branded landing pages. So this is intended when you have a homeowner that's interested in moving forward with Renofi. We will provide you tools to pass them over and hand them off to us. We always encourage a personalized handoff as well, whether that's a text or an email. We want to be human and accessible to your customers and get them on the phone quickly. So these co-branded landing pages will kick them into very simple questionnaires about their projects and about their finances. But if we just want to have a more informal conversation prior to kicking into this flow, we provide direct access to our eligibility and scenario desk for that purpose. So Juliana asked, how can this benefit listing agents? Most buyers want to know the cost of renovation first. Can contractors or architects come in to the dated property and provide an estimate? So yes, for listing agents, the use case would be to educate the buying agent and their potential borrower about how Renofi can help access more funds immediately post-close. And yes, presumably a buyer would want a contractor to come in and assess the property. I know things are tight on timeline right now with such limited inventory, but we have had buyers talk to us, work with a contractor. Oftentimes this comes up on properties that have been on the market for some time. I heard a few weeks ago that half of the inventory on the MLS right now has been on for more than 60 days. And so I think the use cases for the Renofi loans, yes, for fast moving inventory, we can help, but understand, a buyer won't have time to get a contractor in to necessarily close the deal on inventory that's moving quickly. But for properties that might need a little bit more work and have been on the market for a little bit longer, we have had buyers bring in contractors to assess the property and provide an initial estimate. So high level approval process overview. We'll provide the marketing materials, the eligibility calculator, the flyers, and at the time that they're ready to hand off and enter the process, we want to introduce Madeline and kick off the process through the co-branded landing page. By using the landing page that we build for you, we're then well positioned to keep you updated on that loan approval process as it moves through our pipeline. So our ability to attribute that client back to you is predicated upon using the link that we will provide as a part of registration. After filling out the questionnaire, the client will schedule a call with a renovation advisor. They'll upload documents, we'll review the file, ship to lender, lender approves and puts the funds directly in the bank account 100% upon approval. And so we would love to work with you. And Madeline will drop a link, a registration link in the chat here. We would love to, we can build out custom materials beyond what we've shared here. We want to help you market Renofi as a path to help more clients get into homes they love faster. So we'd love to partner up and happy to answer any additional questions.
Great. I saw one more pop into the Q&A here from Megan. And it was, can old clients who bought in the past a few years ago get a Renofi loan or just current clients?
Absolutely, they can. So that's it's a great touch point opportunity for clients who have bought in the past. And so I think part of the value here for an agent is you don't need to wait 10 or 15 or 20 years to accumulate the equity. You don't need to drain your 401k, change your financial planning strategy, whether you want to do it immediately, after purchase before you move in, whether it's 6 months, 2 years, Renofi can help in each of those scenarios. So that's actually the more common use case for Renofi loans. But what we found is in a tightening market for agents, Renofi has really been able to help agents move inventory faster by helping folks become more comfortable with the renovation path.
Great. Well, here's the one thing I can attest to is working with David and Madeline. If you have any questions or you have clients with questions, that service team there is super helpful. So if you need any guidance when it comes to what the scenario might be, what the use case might be following this webinar, feel free to reach out to them. I'll distribute all of their contact information that you saw on the slide as well. And then Madeline did put in the link so you can sign up to learn more and become a partner. And at the very least, just learn more so you have this in your toolkit to be able to use with your clients. So thank you, David, Madeline. Really appreciate you being here. Thank you, everybody, for joining and learning more about Renofi. And again, if you have any questions, feel free to reach out.